Before we begin, let me ask you something and be brutally honest with yourself. Why do you panic when the market starts moving against your real money? Not demo, not backtest, real money. The moment you fund the account, the moment the trade goes live, the moment every tick suddenly feels personal, why does your calm vanish? If that question hits you, if it sits heavy in your chest, then listen carefully. What you're about to hear isn't designed to hype you up. It's designed to expose the emotional truth that has been sabotaging your trades long before your strategy ever had a chance. I learned early in my career that a trader doesn't truly meet himself until real money is at risk. And I was right there in the fire. The moment the trade goes live, the person you thought you were, the confident analyst, the patient observer, the disciplined executor disappears. You are replaced by someone else entirely. Someone hurried, someone anxious, someone who can't stop staring at the chart, someone who desperately wants to control what cannot be controlled. That's why most traders lose, not because the strategy was wrong, but because the version of themselves that shows up when real money is on the line is untrained, emotional, and unprepared. Think about it. Before the trade, everything feels simple. You see the setup clearly. You tell yourself, I'll wait, I'll be patient, I'll follow the plan. But the moment you enter, everything shifts. The candle that looked harmless suddenly feels dangerous. The retracement that normally wouldn't bother you now feels like a threat. Every tick against your position feels like a judgment on your skill, your intelligence, your very identity. You're not trading the chart anymore, you're trading your emotions. I spent my career learning to separate the two, because the market doesn't create your anxiety. You do. Your lack of emotional readiness does. And if you step into a trade without that readiness, the market will break you, every time. Calm trading begins long before you click buy or sell. Calm is not something you switch on once the trade is live. Calm is something you build internally before you ever participate in the market. If you enter a trade hoping to stay calm, you've already lost. Calmness comes from certainty. Certainty comes from preparation. Preparation comes from understanding what you're doing, why you're doing it, and what you are willing to accept. Most traders misunderstand this. They think calmness is emotional strength. They think it's confidence. They think it's experience. No, calmness is acceptance. The traders shaking in their positions haven't accepted what trading really is. They haven't accepted risk. They haven't accepted losses. They haven't accepted randomness. They haven't accepted that outcomes are out of their control. They want the market to behave. They want validation. They want the trade to prove something. I didn't need any of that. I didn't need to be right. I didn't need the market's approval. I only needed control over myself. And that is why I could trade calmly, whether I was risking $1,000 or $1,000,000. But you? You felt that pressure, haven't you? The moment you enter a real trade, your body reacts. Heart pounding, shoulders tightening, breathing shallow, mind racing. You watch every candle, analyze every tick, start predicting, hoping, fearing. You start micromanaging the position because deep down, you don't trust yourself, your plan, or the process. You only trust the possibility of avoiding pain. And that is the seed of emotional collapse in trading. The fear of emotional pain, not the fear of financial loss. If you enter the market emotionally fragile, the market will break you. Not because of volatility, not because of manipulation, not because of liquidity, but because a trader without grounding will always react. Close too soon, hold too long, chase entries, double down, break every rule promised to yourself. Every time you do, calmness disappears faster. If you've ever felt like trading turns you into someone else, you're not weak, you're human. Humans fear uncertainty. Humans want safety. Humans want control. Trading denies all three. That's why it feels psychologically violent to the unprepared mind. I overcame this by reframing the entire experience. Calmness is not a feeling. Calmness is a form of discipline. You don't wait for it. You build it. You condition it. You create it through structure, repetition, and acceptance. Calmness is not comfort. Calmness is mastery. And mastery starts with acknowledging what really makes you panic, the unknown. You fear the trade because you don't know what you'll do if it goes wrong. You fear the volatility because you don't know where you'll step out. You fear the pullback because you don't know if it invalidates your setup. You fear missing out because you don't know if the market will come back. You fear holding because you don't know if your profit will shrink. Every source of panic comes from uncertainty. I once said, a trader who does not know what he will do before he enters the trade is already defeated. Most traders lose calm because they make decisions after the pressure begins instead of before. Calmness is simply the absence of internal conflict. When your plan is clear, when your risk is acceptable, when your expectations are realistic, when your mindset is aligned with uncertainty, there is no conflict. And without conflict, emotions lose their power. I wasn't calm because I had no fear. I was calm because I removed the friction inside myself that fear could cling to. That's the transformation you're beginning now. Until you build that emotional foundation, every trade will feel heavier than it should. Every candle will feel like a threat. Every fluctuation will feel like a test. The moment in the market will feel unstable. But the moment you learn to structure your mind the way I did before you enter the trade, the entire experience changes. Anxiety fades, panic weakens, noise becomes tolerable. The pressure of real money stops feeling like danger and starts feeling like part of the process. Now that you understand the battlefield inside yourself, let me take you a step further. Calm trading is not just a mindset you switch on when the money is live. It's a system of preparation, repetition, and self-mastery that starts long before you enter the market. You see, I didn't achieve calmness by sitting at a desk and wishing fear away. I achieved it by learning how my mind reacted under pressure and training it to act deliberately, no matter what the market threw at me. I remember early in my career, I would often make the mistake of thinking strategy alone was enough. I would backtest setups, memorize charts, and believe that if the pattern was right, success would automatically follow. But real money has a way of exposing the flaws in that belief. One tick against your position, one sudden surge of volatility, and all the confidence you built evaporates. That's when you realize the chart doesn't care about your preparation. Your strategy doesn't care if you stay disciplined. What matters is your mind, the one that starts panicking, second-guessing, and trying to control the uncontrollable. I learned that calmness is not a natural state. It is a cultivated one. You must know exactly what you will do before you enter the trade, and not just in theory. You must anticipate the scenarios that will test your patience and predefine your responses. If the market moves against you by 10 pips, what will you do? 20? 50? At what point will you adjust? At what point will you let the trade breathe? This is not guesswork. This is rehearsal. And just like a musician practices scales, you practice responses to pressure before the music even starts. The most important tool I developed was the ability to observe myself in real time. I would ask myself constantly, am I reacting out of fear, greed, or impatience? Am I following my rules, or am I being swayed by the market's movement? This self-questioning is uncomfortable. I won't lie. Your mind will resist it. Your ego will scream that you're wasting time, that you should act immediately, that hesitation is weakness. But every moment of honest reflection strengthens your calmness muscle. Every time you pause, observe, and then act according to the plan, you reinforce your ability to endure pressure without surrendering. Let's talk about fear. Most traders think fear is their enemy, that it must be removed for calmness to exist. That's nonsense. Fear is a signal, not a weakness. Fear tells you that what is at stake matters, and it tells you that your system is being tested. The mistake is letting fear dictate action. The first time I felt my heart race while in a trade, I realized that the only way to survive was to separate observation from reaction. I had to learn to feel fear without letting it control my hand. And I did this by defining my boundaries in advance. When the trade reached a certain level, I knew exactly what I would do. No debate, no improvisation. This allowed my fear to exist without ruling me. Greed is equally insidious. You think because the market is moving in your favor, you must hold longer or add more. You convince yourself that you can force the market to obey your wishes. I've seen traders blow entire accounts in moments of exhilaration. Calmness is the discipline to ignore the temptation of greed, to follow your plan regardless of how promising the move looks. I trained myself to view profits as temporary companions, not permanent guarantees. By detaching from the emotional highs, I avoided the most dangerous mistakes. Patience is another pillar. True patience is not waiting passively. It is active endurance. I would sometimes sit in a trade for hours, watching it fluctuate, knowing that any premature move could destroy the edge I had identified. Patience allows the market to reveal itself on your terms. Impatience forces you to react to the market's terms. And this is where many traders fail. They are impatient because they fear discomfort. I was patient because I had trained myself to endure discomfort as a necessary part of process. The difference is subtle, but it is everything. Noise is the next enemy. Most traders see every candle, every retracement, every spike in volatility as a signal. They act, panic, and adjust endlessly. I learned to identify what truly matters. Not every movement is significant. Not every fluctuation requires intervention. Calmness comes from the ability to distinguish between signal and noise. When your mind is clear, irrelevant movements lose power. When your mind is chaotic, even small deviations feel like emergencies. Mastery is learning to let the noise pass without disturbing your equilibrium. Detachment completes the equation. You must detach from outcomes. You will be wrong. You will face losses. You will miss opportunities. I never traded for validation. I traded for execution. The outcome was a byproduct, not a measure of my worth. That detachment allowed me to maintain calm in moments where others panicked. It allowed me to act decisively, even when my account fluctuated wildly. Without detachment, fear and greed always win. With it, calmness becomes unshakable. There is also the power of incremental focus. Break the trade into steps, one candle at a time, one decision at a time. Don't concern yourself with the entire day, the entire trend, or the entire account. Focus on the immediate action you must take according to your plan. That focus alone is enough to reduce emotional load. The mind cannot sustain calm when it is overwhelmed. Calmness grows when decisions are manageable, predictable, and aligned with preparation. Repetition is essential. I didn't become calm by executing a single trade correctly. I became calm by repeating the process thousands of times, by encountering fear, greed, and impatience over and over, and by choosing discipline each time. Every stop-loss honored, every entry according to plan, every pause, before acting reinforced the muscle of calmness. And as it strengthens, the mind begins to operate above the level of panic. The charts no longer dominate. You dominate your reactions. Finally, understand that calmness is an ongoing process. The market will always test you. New volatility, new setups, new stakes, all will challenge your discipline. But the more you expose yourself deliberately, the more you rehearse your responses, the more you detach from outcome, the more patience you endure, the stronger your calm becomes. It compounds quietly, invisibly, until one day you realize that the market's movement no longer rattles you. You can observe, assess, and act with precision. That is the state I want you to reach. That is the state I reached, and it is what allows consistent traders to survive where others fail. Remember, calmness is not given. It is earned. It is not a feeling. It is a skill. It is not a momentary triumph. It is a lifetime of preparation. And every trade you take from this moment forward is an opportunity to reinforce it, to build it stronger, to make it permanent. The market will challenge you. Your emotions will test you. Your instincts will scream at you to act impulsively. But if you act according to preparation, patience, and detachment, you will find that the pressure of real money no longer feels like danger, it feels like part of the process. That is the lesson of calm trading. That is the lesson I learned over decades. And that is the lesson you can begin mastering today. Now that you've begun understanding how to build calm before the trade, it's time to confront what happens when the market actually tests you. Because no matter how prepared you are, real money will always trigger something in you that no backtest, no indicator, no demo account can replicate. And it's in those moments, the first tick against your position, the first spike in volatility, the first unexpected reversal where calmness is forged or destroyed. I remember the first time I truly understood this. I had identified a trade that, on paper, was perfect. The setup was textbook. The trend, the support, the resistance all aligned. My plan was clear. But as soon as my capital was committed, my body reacted before my mind could. My heart raced. My hands tightened on the desk. My breathing became shallow. Suddenly, my mind was full of what ifs. What if I'm wrong? What if it reverses? What if I lose it all? That is the point where most traders make mistakes, where the novice trader panics, where the disciplined plan is abandoned for hope or fear. I had to learn to sit in that discomfort, to observe my own reactions, to separate the signals of the market from the signals of my fear. Calmness is not the absence of emotion. It is the ability to feel it fully, acknowledge it, and act according to preparation rather than impulse. The market doesn't care if you are afraid. Your emotions, left unchecked, will destroy your account long before the market has a chance. Let me be clear. Fear, greed, impatience, these are natural. They are unavoidable. They are part of the human condition, and any trader who believes otherwise is lying to himself. The question is not whether these feelings will arise, it's whether you will let them dictate your decisions. I learned to treat them as signals, not commands. When fear rose, I reminded myself of my plan. When greed tempted me to overextend, I reminded myself of my risk limits. When impatience pressed, I reminded myself that waiting was an active, necessary part of execution. This is how calmness becomes more than a fleeting state. It becomes a practice, a habit, a part of your identity. Preparation, as I've said before, is the foundation. But let me go deeper into what preparation actually looks like in action. Before entering a trade, I define every possible scenario, not vaguely, not generally, but with absolute clarity. I know my entry point, my stop loss, my target. I know what I will do if the market moves against me, what I will do if it moves in my favor. I rehearse it in my mind until the responses are automatic. This is not over-planning, it is self-defense. Because when the trade begins, you will not think clearly. You will feel. And without a predefined structure, those feelings will dictate your decisions, and you will fail. Another critical lesson is recognizing the difference between noise and signal. Most traders see every fluctuation as a test, every retracement as a threat, every spike as a disaster. But the market is full of irrelevant movement. Calmness comes from the ability to identify what truly matters and ignore the rest. I trained myself to see patterns in context, to understand what was relevant to my plan, and to let minor deviations pass without disturbing my equilibrium. When you can do this, you remove the market's power to provoke panic. Detachment is the next principle. You must detach from outcomes. You must accept that you will sometimes be wrong. You must accept losses as part of the process. You cannot let your sense of self-worth or your ego ride on every tick. I learned to trade for execution, not validation. The outcome is simply a byproduct of your discipline. That detachment allowed me to act decisively, even when my account fluctuated wildly. Without detachment, fear and greed always win. With detachment, calmness becomes unshakable. Patience remains the cornerstone. But it's not the patience of waiting idly, it's the patience of control. Waiting for the market to reveal the high probability setup, enduring the discomfort of uncertainty, tolerating the mental itch to act prematurely. Patience transforms fear into opportunity. Impatience turns opportunity into mistakes. I can't overstate this. The traders who succeed are the ones willing to endure discomfort without abandoning their plan. Every premature exit, every impulsive entry is a lesson in lost calmness. Incremental focus is equally vital. Break the trade into steps. One candle, one movement, one decision at a time. Don't overwhelm yourself by trying to process the entire market, the entire trend, the entire account simultaneously. When your focus is incremental, you reduce emotional load, you isolate the variables that matter, and you give your mind a chance to act deliberately rather than reactively. Repetition compounds calmness. I didn't become calm after a single trade. I became calm through thousands of trades, each one a rehearsal in managing fear, greed, impatience, and doubt. Each trade that followed my plan reinforced my ability to maintain composure. Each stop loss I honored, Each profit I took according to rules strengthened the muscle of calmness. This is the only way to survive long enough to succeed consistently. Let me share one of the hardest lessons I learned. Emotional endurance is more valuable than technical skill. A perfectly executed strategy means nothing if your mind unravels under pressure. I have seen novice traders with modest systems outperform geniuses with perfect strategies because the novices could remain calm and follow their plan, while the others allowed fear and greed to dictate action. Calmness is the ultimate edge in a world where the market is impartial. The final, subtle point. Real money amplifies everything. It magnifies fear, hope, doubt, impatience. That's why practice with small stakes is not enough. That's why backtests, charts, and paper trades can never truly prepare you. You must experience the pressure and learn to act under it. You must feel the panic and still follow your plan. Only then does calmness become durable, transferable, and profitable. And when you achieve that state, everything changes. You no longer panic at minor fluctuations. You no longer chase the market. You no longer feel the need to micromanage every tick. You watch, observe, and act according to plan. Your mind is steady, your decisions deliberate, your risk contained, and you begin to see what the market is offering instead of what your fear is demanding. Remember, calmness is not a gift. It is earned. It is built through preparation, repetition, detachment, incremental focus, patience, and honest observation of yourself. It is tested every day, in every trade, but the more you practice, the stronger it becomes, until one day, the pressure of real money no longer feels like a threat. It becomes part of the process, part of the discipline, part of your identity as a trader who survives when others fail. The market will continue to test you, and your emotions will continue to rise. But if you have trained yourself to observe without reacting, to execute according to plan despite fear and greed, to endure discomfort with patience, and to detach from outcomes, you will find that calmness is no longer fragile. It is your constant companion, your edge, your secret weapon. And that, my friend, is how you turn the chaos of the market into opportunity and the pressure of real money into mastery. By now, you understand that calmness is built before you enter the trade, and that it is tested the moment real money is on the line. But there's another layer few traders ever grasp, the interplay between confidence and humility. I learned early on that overconfidence is just another form of emotional weakness. It masquerades as strength, but in truth, it sets the stage for panic when the market inevitably moves against you. Calm trading requires both self-assurance in your preparation and humility in the face of uncertainty. I remember a trade in my early years where I was sure I had identified a perfect breakout. My plan was flawless. I had rehearsed every scenario. My entry, stop, and exit were all defined. I was confident, too confident. The trade began well, moving in my favor. Then a sudden retracement occurred. In that moment, I realized overconfidence can be more dangerous than fear. I felt the impulse to prove I was right, to hold longer than I should, to add more risk. That is where humility saves you. Recognize that no matter how certain you are, the market is indifferent to your confidence. You must always respect its uncertainty. Calmness is maintained not by arrogance, but by disciplined humility. Humility allows you to step back and observe without judgment. It allows you to acknowledge, I may be wrong. The market may behave differently than I expect. This simple acceptance reduces internal conflict, and with it, the grip of fear and greed. The trader who cannot accept this truth is forever at the mercy of emotions. The one who can begins to see the market clearly and act deliberately, even under pressure. Let's talk about risk management, because it is the practical side of calmness. You may have all the mental preparation in the world, but if your risk is unmanageable, calmness cannot survive. I always define my risk before entering a trade, not vaguely, not, I'll stop if it hurts too much, but precise, exact amounts I was willing to lose. This is not just about money, it's about emotional preservation. When your risk is contained, panic has nowhere to take root. You know that even if the market moves against you, you will survive. And survival is the foundation of long-term success. Another cornerstone is consistency. Calmness cannot be occasional. It cannot appear only when the trade looks easy or the trend is strong. It must be present in every entry, every exit, every tick. That consistency is built through routine. I followed the same process day in and day out. Analyze, plan, rehearse, enter according to plan, observe without interference, exit according to rules. The repetition of this ritual reinforces calmness until it becomes automatic, almost unconscious. And when calmness becomes habit, the market stops feeling threatening and starts feeling like a manageable process. Let me speak directly about mistakes, because they are inevitable. No trader enters the market without error. I lost trades I should have won. I misread setups. I mistimed entries. But the calm trader does not react emotionally to mistakes. He analyzes, he records, he learns, and he moves on. Panic in response to a loss compounds the problem. Calmness allows you to acknowledge error without surrendering control. This mindset transforms every loss into a lesson rather than a catastrophe. Observe another principle: selective engagement. Not every opportunity is worth pursuing. The market offers countless trades every day. Some align with your plan, many do not. The calm trader is selective. He waits for setups that meet his criteria, refusing to be swept along by market noise or fear of missing out. I've seen traders chase every minor spike, only to lose their discipline and their account. Calmness comes from patience, from discernment, from choosing your battles. Micromanaging positions is a trap that destroys calmness. Humans have a natural desire to control outcomes, but in trading, the only thing you truly control is your own behavior. I learned to define boundaries, entries, stops, and targets, and then step back. I observed. I allowed the trade to unfold within those limits. Micromanaging creates tension. It magnifies every tick. It strengthens fear and greed. Stepping back, observing, and letting the market play out according to your rules is the key to sustained calm. Discipline is the muscle that holds all this together. It is tested constantly. A calm trader executes the plan despite impulses, despite doubt, despite fear. I have seen the most intelligent traders fail simply because their discipline faltered for one trade. Discipline is the framework that transforms preparation, patience, risk management, humility, and focus into actionable calmness. Without it, theory is useless. Calmness is impossible. Another layer is mental rehearsal. Before every session, I visualized scenarios: trades going against me, trades moving in my favor, sudden volatility. I imagined my responses. I practiced detachment. I trained myself to remain steady no matter the market's behavior. This preconditioning is what allows calmness to endure when real money is at stake. It is the difference between reacting unconsciously to fear and acting deliberately under pressure. Let's not ignore the role of environment. The external conditions of trading: noise, interruptions, social influence can amplify emotional responses. Calm traders manage their environment. They remove distractions. They create space for focus. They limit external noise. The fewer triggers, the less interference with mental clarity, the stronger the calmness. The market will always have enough volatility. Do not add unnecessary chaos yourself. Finally, remember that calmness is a process, not a destination. It is tested and refined continuously. Every session, every trade, every tick is an opportunity to strengthen it. And with time, practice, and persistence, calmness transforms from a fragile response to pressure into a permanent edge. When real money is on the line, it no longer feels like danger. It becomes part of the practice, part of the discipline, part of the mastery. If there's one truth I want to leave with you in this part, it is this: markets are impartial. Outcomes are uncertain. Volatility is inevitable. The only variable you can control is yourself, your reactions, your discipline, your focus, your patience, your detachment. Build those, strengthen them, rehearse them, and calmness will not just survive the pressure of real money, it will dominate it. Master calmness, and you have mastered the game that destroys the majority of traders. Fail to do so, and no strategy, no chart, no signal will save you. That is the truth. That is the lesson. That is the edge that separates survivors from the rest. We have explored calmness in trading, its foundation, its practice, and its refinement, but now we arrive at the final and most critical step, applying it consistently over time and understanding what it truly means to survive and thrive with real money on the line. Because calmness is not a temporary state, a lucky streak, or a rare moment of clarity. It is a lifelong skill, honed through repetition, discipline, and relentless self-observation. It is the difference between a trader who thrives and a trader who repeatedly fails despite all knowledge and strategy. When I reflect on my career, I realize that the trades that defined my success were not the ones that moved in my favor immediately. They were the trades in which my discipline held when my mind screamed to act irrationally. They were the trades in which I felt fear, doubt, and even temptation, yet chose preparation over impulse, patience over hurry, detachment over obsession. That is the essence of calm trading. It is a mindset that survives volatility, disappointment, and unexpected reversals. One lesson I want to drive home is the difference between short-term courage and long-term calmness. Many traders feel brave when they enter a trade and it goes their way. They feel confident when they predict the market correctly. But that is temporary. Real calmness, real mastery, is being steady when the trade moves against you. It is acting deliberately, executing your plan, and remaining composed despite the rising pressure of real money. That is the form of courage that matters, not the fleeting thrill of being right, but the sustained discipline of being steady. Let us revisit preparation, because it is the cornerstone of everything. You cannot hope to stay calm in a live trade without precise, predefined rules. Entry points, stops, targets, contingencies, all must be clear in advance. Every scenario that could trigger emotional reactions must be anticipated and rehearsed. This is not just planning. It is preconditioning your mind to act rationally when fear and greed appear. The trader who fails to do this is already at a disadvantage the moment the trade begins. Calmness is built before the trade, and every trade without preparation erodes that calmness like a leak in a dam. Risk management, too, is essential. You may have read it 100 times, yet its importance cannot be overstated. Risk is not just about money. It is about preserving your emotional equilibrium. When your exposure is manageable, panic cannot take hold. You understand that even a loss is survivable. You understand that your discipline is stronger than any single outcome. This mindset is not theoretical. It is practical. It allows you to act without hesitation when the market tests your nerves. And acting without hesitation, with a steady mind, is the difference between consistent profit and repeated failure. Another principle I must emphasize is observation over reaction. Most traders react first and think later. They see a move, feel a pang of fear or excitement, and act before they have analyzed it. I learned early that to trade calmly, I had to observe first, think second, and act third, always according to predefined rules. Observation allows you to separate emotion from execution. It gives you the ability to see what is truly happening instead of what your panic or desire tells you is happening. Calmness lives in that space between stimulus and response, and mastering it is the key to survival. Let's also discuss patience. I have said it before, but patience is the silent force behind every successful trade. True patience is not passive. It is active endurance. It is sitting through fluctuations, watching the market, and knowing that the proper action will occur according to plan. Impatience is the enemy of calmness. It leads to early exits, overtrading, and emotional mistakes. I learned to embrace discomfort, to tolerate uncertainty, and to wait for confirmation before acting. That patience compounds into calmness, and calmness compounds into long-term profitability. Detachment is equally vital. Every trader will face losses, missed opportunities, and market reversals. The calm trader accepts these events without allowing them to affect judgment. You cannot control outcomes, you can only control your behavior. Detachment transforms fear and greed from destructive forces into neutral observations. I treated every profit and loss as data, as feedback, never as validation or condemnation. That mental framework is what allowed me to survive losses that would have destroyed lesser traders. Without detachment, no strategy, no setup, no system can endure. Consistency is another pillar. Calmness cannot be sporadic. It must exist in every trade, every session, every decision. I maintained routines, habits, and methods that reinforced calmness daily. Every plan executed according to rules. Every stop respected. Every target taken appropriately. It all reinforced the muscle of calmness. The market may test you repeatedly, but if your consistency is strong, your emotional foundation remains intact. Chaos does not dominate. Pressure does not overwhelm. Calmness persists, and with it, clarity, precision, and survival. Let us not forget humility. Overconfidence destroys calmness faster than fear. You may be right many times, but the market remains indifferent to your certainty. Recognize its power. Respect its unpredictability. Humility allows you to observe without judgment, to act without ego, and to maintain composure when uncertainty rises. This balance of confidence in your preparation and humility before the market is what separates enduring traders from those who collapse. Finally, understand that calmness is both a skill and a lifetime practice. It is built through repetition, reflection, and relentless self-awareness. Every session, every trade, every reaction to volatility is an opportunity to strengthen it. And when you achieve this, real money no longer feels threatening. It becomes part of the process, part of the discipline, part of your mastery as a trader. As I conclude this final part, remember this: the market will always test you. Fear will always arise. Greed will always tempt you. Impatience will always press. But if you have built your foundation in preparation, observation, patience, detachment, humility, and consistency, calmness will be your constant ally. You will act deliberately. You will execute with precision. You will survive when others fail. And in survival lies opportunity. In discipline lies profit. And in calmness lies mastery. If you take only one lesson from this entire series, let it be this: master yourself first. The market will always challenge you, but if your mind is steady, your decisions deliberate, your discipline unwavering, you will navigate its chaos with clarity. You will turn the pressure of real money into a tool, not a threat. And that, above all else, is the edge that separates the trader who prospers from the trader who disappears. Calmness is your shield, your weapon, and your path to mastery. Guard it, cultivate it, and let it guide every trade you take from this moment forward.